What's up guys, Ben here and welcome to Motivation to Invest. Ron Barron is one of the world's greatest investors. He's the founder of Barron Capital, which has over $30 billion of assets under management. He's widely regarded as the biggest Tesla bull and predicted a $10,000 price target back in January. He recently did another interview in October 2020 and I've posted that on this channel, so if you've not watched that yet, check it out. But in this video, I'm going to deep dive into the funds behind this great investor. More specifically, I'm going to deep dive into Barron's Opportunity Fund. This has been one of his most successful funds this year. So if you're ready for that, let's dive in. Right guys, so here we are inside Barron's Opportunity Fund. Ticker symbol BIOIX. The fund primarily invests in high-growth businesses of any market capitalization, benefiting from innovation through development of pioneering, transformative, or technologically advanced products and services. The fund is diversified. This has a Morningstar rating of 5 stars. Equity style, so it's got large, medium, and small businesses inside the equity, generally focused on growth. So this is a true growth portfolio. Got the portfolio manager here. Fund. So year to date, this fund is up 62.53%, which is incredible. You made 60% of your money in just 1 year. Well, less than 1 year, just 6 months. So year to date for 2020, that's incredible. So comparing that to the S&P 500 and the Russell 3000 Growth Index. So the S&P 500 year to date is only up 5% because remember it did skyrocket and then it corrected back again. So the S&P 500 is only up 5.57%. And remember, we are in a recession. Russell 3000 Growth Index up 23%, which isn't too bad. Barron Opportunity Fund 53.87%, which, and we've established that it's actually up 62% here. So it's outperforming the market massively. So the portfolio characteristics, it's got assets of $1 billion, number of equities 72, so it's 72 different stocks in there. Earnings per share growth 19.9%, price to book 8.1, price to sales 8.8, price to earnings 49.9. So this is not for value investors, not for the Warren Buffett investors. This is pure growth, and we know with growth stocks, the P ratio can be sky high, but from that performance, 60% year to date, it's looking pretty sweet. Holdings, top 10 holdings. Now, this is what we're interested in. So number 1, we've got Microsoft Corporation. Net assets, 7.6% of the portfolio. Now, I've always touted Microsoft, said it's a fantastic company. It's a growing tech giant. They, of course, have the Azure platform, second largest cloud provider after Amazon. They also have Microsoft Teams, which has had a lot of momentum this year. So great company overall, great management, very stable stock price. If you look at the stock chart for Microsoft, you can see it's been steadily growing, very rarely dips, and it's quite a stable stock. Second, Amazon Incorporated, 6.9%. Now we know Amazon, leader in e-commerce, leader in cloud services, whether it's Amazon Web Services. They're also working on vertical integration, so owning the entire supply chain. So Amazon doesn't just want to have people selling on their website. They want to own the entire supply chain. So they want to own the warehouses. They want to own the vehicles that are going to be delivering the parcels to people. They're even working on drone delivery. Of course, in the voice market, you have Amazon Alexa, and then you have Amazon Prime. Now, Amazon Prime, this is a statistic I heard recently, has over 50% of the US population as members. Now, that's incredible. Me personally, I remember when I log into Amazon, I go onto the software and I always click, no, I don't want to join Prime. And for some reason, they always get me. I always end up on the free trial, or somehow they just get me with it because what I'm buying works out, well, if I go on the free trial, I actually end up saving money by going on the free trial. So it's so easy to capture people onto the Prime platform. And once they're on there, they of course get benefits such as Prime Music.
No item too trivial. No quantity too small. To be hand delivered into your home like an emperor. Anything. Anything in the world that comes to mind. Any fleeting thought you have while drunk. Anything. I want one pen. Now. Give it to me now. When I press buy, put the item in my hand.
So yeah, Amazon is literally just taking over the world. It's one of the best stocks at the moment. Of course, there's always a negative of these amazing growth stocks, and that is the valuations. Number 3 on Barron's list, and that is Tesla. So Tesla, 3.7% of the portfolio. This is probably the stock that Ron Barron is most known for. He said in his recent interview, he goes to restaurants now and people call him Mr. Tesla because he was touting this stock years and years ago, before, when everybody was very bearish on the stock and it didn't have this massive growth. So he was touting the stock back then. Some people listened, some people didn't, but now he's been proven to be right. So he's now like a Tesla god, along with Cathie Wood. So yeah, Tesla, we know, of course, they're building factories left, right, and center. They've just had Tesla Battery Day. I've got a great review of that. It's 7 top points from Tesla Battery Day in 7 minutes, so you can check that out in the link below. They're working on a $25,000 car, which will be a more affordable car in the range. The only negative is they said this could take around 3 years. Some say this is too long. Some say competitors could catch up in this time. But we'll see what happens. At the moment, they seem to be the leaders in battery technology and artificial intelligence. And in autonomous driving. So their cars have actually had so many test miles on the road that they seem to be miles ahead of the competitors. And then Tesla's also a technology company. So we've got Tesla Solar, we've got Tesla's Powerwall. This is all aligned with Tesla's mission, which is basically to accelerate humanity towards renewable energy. And they're doing that, definitely. 4th on the list is another one of my favorite stocks. So that is Alphabet, 3.7% of the portfolio. I actually did a video a couple months back, and even another video a few weeks back on Alphabet. So Alphabet, of course, owns Google. They own YouTube, where you're watching me right now. They own Android, which is the operating system on Samsung, a variety of other phones. Fantastic company. They're the number 1 leader in search. So yeah, on to stock number 5, and we've got Facebook. 3% of the portfolio, another one of my favorite stocks out there. I did a video on that recently, talking about not just the fact that Facebook's the number 1 social networking platform, and they own Instagram, which is probably the 2nd most popular social networking platform. They also own WhatsApp. They also own the majority share of online advertising, along with Google. So fantastic company overall from that point of view. Their numbers are fantastic. Their growth rates around 20-30% per year. And they're also working on virtual reality and augmented reality. Now, I did a previous video on that. So as Facebook owns Oculus Rift, they're working on some crazy stuff, which I think will definitely be revolutionary. Be sure to watch that video I did. It's mind-blowing. So they're working on, of course, Oculus Rift. You wear the headset, and you can virtually interact on games. You can virtually interact with people. They're also working on augmented reality, where you can project holograms. Now, in this growing industry, Facebook could definitely be the leader. Even despite that, on their normal platform, they're working on Facebook Shops. They've got Facebook Marketplace. They've got a dating platform, which they're trialing in Brazil. Facebook's just so ubiquitous, and it's got so many different avenues. And that's not to mention it's an addictive platform. So this is quickfire, guys. I hope you like the style of video. If you appreciate the value, big thumbs up. And if you haven't subscribed already, hit that subscribe button for more tips like this. Next on, Zoom Info Technologies. Now, I believe that's Zoom, as we call it, the traditional Zoom. So video conferencing. We now live in the Zoom economy. Zoom has got a great business proposition. It's free to sign up. It's easy to use. And it's necessary in these times we live in with regard to lockdown. So to me, Zoom is a fantastic company. I invested in that a few months back. And actually, all these companies that are in the top 6 here, and even 7, I own stocks in all them. So that's just information for you guys. Full disclosure there. 2.6% of the portfolio, Zoom. I think Zoom will continue to grow. Yes, they are facing competition from Skype, from Microsoft Teams, from other providers out there, but Zoom still seems to be head and shoulders above the rest. Next on my list, stock number 7, we have Alibaba Group Limited, 2.6%. Now, if you're a Western investor and you want to invest in China, Alibaba, simple. It's one of the most trustworthy, well-regulated companies to invest in China. It's got super fast growth. Some call it the Amazon of China. So they've got Alibaba Cloud, they've got the e-commerce platform, and many say it could follow the same trajectory as Amazon in the US. Another stock here, we've got Snowflake. So I did a video on this as well. So Snowflake is a business-to-business enterprise cloud computing company. They work on the database side of things. So it's a very interesting company to check out. Warren Buffett and Berkshire Hathaway actually invested into Snowflake, which they had a recent IPO, and that was very surprising because Warren Buffett has always been very anti-technology. So that's definitely one to watch. I personally didn't invest into it at that time due to the valuation being extremely high, but I do think it's a strong company, so it's definitely one to watch in the future. Now, there's also 2 more stocks on here, which I haven't researched fully yet. So let's dive in to those 2. They are RingCentral Incorporated, which makes up 2.3% of the portfolio. So let's check those guys out. So I haven't fully researched these guys yet. RingCentral, they seem to be a communications platform company, similar to Zoom from what I can see here. They've got RingCentral Office for integrated phone video conferencing. They've got a team messaging collaboration service. They've got video conferencing, cloud-based phone system, customer engagement, contact center. This could be, this is just speculation here, could be what's called a virtual contact center, virtual call center. So rather than companies having to set up these massive call centers, they can actually just use a provider like this and get people to work the customer service from anywhere in the world. That's just a assumption here. I haven't fully confirmed that yet with this stock. But yeah, message, video, phone together, RingCentral, easy to use, easy to manage, secure, reliable, open. Interesting company. Let's check out the numbers. RingCentral. So we're here on Stockopedia. Now, I always get asked, Ben, which platform do you use to analyze stocks? So here it is, Stockopedia. And I've actually got a special 25% off discount link if you guys want to check out the platform and see if it fits your investing style. I'll leave that in the link below. But yeah, here it is, Stockopedia. Adventurous large cap. They actually say it's a momentum trap, so be careful there. Stock rank only 39, high momentum 87, value 15, quality 30. So according to Stockopedia, it's a bit of a momentum trap. Compound annual growth rate in the revenue over 30%. So it's fantastic growth from the revenue. Of course, it's unprofitable like many of these fast growth companies. But the revenue is forecast to increase, and it is forecast to become profitable later this year and into 2021. Analyst consensus. So we've got people here from all over: Wells Fargo, Morgan Stanley, Deutsche Bank. 15 buy, 10 strong buy, 1 hold. So they think it's a fantastic stock. Current ratio 2.7. So that's your short-term cash to your short-term debt. Generally, I look for at least 1.52. Means the company can pay off its debts at least twice. This got 2.7, which is fantastic. P ratio 253. Wow, that is a sky-high valuation. So yeah, that's just something to be aware of. RingCentral Incorporated. If you want me to do a full video on that, analyzing it in further detail, let me know in the comments below. So there's one more stock on Barron's top 10 holdings of the Opportunity Fund here. So I'm going to dive into that real briefly and go over it. It's called ARGEN SE. I believe that's correct pronunciation. Correct me if I'm wrong. So this seems to be a biotechnology company. The company develops antibody-based therapies for the treatment of severe autoimmune diseases and cancer. ARGEN serves customers in Netherlands and Belgium. So it's a Belgian biotech company. United in our commitment to improve the lives of patients. So it's a healthcare speculative large cap momentum trap again, according to this. Stock rank of only 30, momentum 79, values 7, quality 35. So according to Stockopedia, again, another momentum trap. But that compounding annual growth rate on the revenue, wow. Now, seriously, guys, generally, I say growth stock should have at least 20% to 30% on the revenue growth rate. This has got 79.4% on average growth rate. Now, that is incredibly high. So it's predicted to reach $79 million in revenue. So it's still relatively small cap company, $10 billion market cap here. Still relatively small cap company. Some profitable still as well. Something to be aware of. Analyst consensus, 3 hold, 2 buy, 3 a strong buy. Current ratio 9.9, so they've got plenty of cash on hand, which I'm assuming they're going to keep investing into research, development of their products and services. So they have got a lot of cash on the books and very healthy, very unlikely to go bankrupt despite their unprofitability. P ratio unknown, price to book 6.96. So that's Barron's Opportunity Fund. Do you know what? I'll just show you guys as a little bonus, a quick overview of some of the other funds. So we've also got Barron Discovery Fund, which is a sort of small cap growth fund. We've got Barron Growth Fund, which is another growth fund. We've got Barron Small Cap Fund, which is another small cap fund. We've got Focus Growth Fund, Barron Asset Fund, Barron Durable Advantage Fund, Barron Fifth Avenue Growth Fund, Barron Partners Fund, Emerging Markets Fund, Global Advantage, Barron International Growth. They've got a FinTech Fund, Healthcare Fund, Real Estate. So yeah, they've got a variety of funds there. The favourite of mine is the Opportunity Fund, as it's got some of the most well-known companies on there. Many of the companies I'm already invested into, so Barron Opportunity Fund is my favourite. The Partners Fund is quite interesting as well, so I'll just show you some of the stocks here. So Partners Fund, you've got Tesla in there, you've got Zillow, the online property e-commerce. They've also got SpaceX. So a great thing about a company like Barron Funds is they can invest in private equity in private companies. So they've got percent in SpaceX, which is incredible. They've also got Charles Schwab, Hyatt Hotels, as they believe they will recover. So yeah, Barron Partners Fund is my second favorite. They've also got another fund with a lot of small cap stocks on there, mainly healthcare, such as Pacific Biosciences, which is in the gene editing space. Cathie Wood is also investing into that. So yeah, that's a quick fire overview of Barron Funds. I hope you guys found that video valuable. If you did, feel free, give the video a big thumbs up. If you haven't subscribed already, hit that subscribe button. If you want more investing tips and exclusive stock market picks, which I personally am investing into. And with that being said, I'll see you guys in the next video. Have an amazing day and invest safe.